Hey guys, this is Logic speaking. Welcome to a new no bus trade technical analysis section, and today I'm gonna be talking more about the USDCAD pair because there seems to be a lot of things going on in the Forex market, the global stocks. The steer and in the fear of the coronavirus, and it's really affecting the markets in diverse ways. So right now, we are just trying to pick the stable currencies to analyze out. And today, I feel there's a very good move on USD because it's oil driven. It's a oil driven pair, and there's really not much going on it. So today I'm going to be analyzing the USD card, and in a few minutes, and I want you guys to pay full attention to what I'm going to be doing. Like I said, at No Bus Trade, when we're trying to analyze the technical, chart, we go to the bigger time frame to see what is happening on the bigger time frame, then understand the story the price is trying to tell us, and bring it out to smaller time frame. And like we always say, the chart is always a storybook. It tells stories, so you have to pay attention to whatever it is the price is telling you. So right now, like we said, we'll bring it to the bigger time frame, and let's make sense with the chart. Let's see what's going on with the chart. On the chart, on the bigger time frame, we can see the price has been making a series of push in a long time, since January 2016, and we expect a further push. We don't know where the push is going to, but we expect a further push, which so far so good. Today's the 28th of January, and you can see the last monthly candle right here, giving us a very good bullish move. So what do we say of this? Now let's make sense. Switch to your line chart, like we always say. Let's identify the sensitive zone out of this trade. Number one, we have the upper zone. We have the upper zone right here. Let me use the blue color. Yeah. We have the upper zone right here. We have the mid-range zone right here. You can see all of these zones are all area of sensitivity, right? We've posted videos about how to identify this area of sensitivity. So if you're not really getting it, I think you need to go back to the book to understand it better. So this is the lower zone right here. Just the lower zone right here. Now, as you can see, right now the price has been disrupted in such a way that it becomes simpler, because now we have the middle zone, we have the lower zone, we have the upper zone, right? So what's the next thing we do? We'll switch it back to a line chart. Now, it's making a lot of sense to us right now because price made a push right above the mid-range zone, came back to give us a retest, something that seemed like a retest in the mid of the mid-range zone. And what we seem to see right now is a bullish strength coming into the market. So that means the bulls are really coming into the market. So now let's make sense with things further. Let's move to the weekly time frame. Now on the weekly time frame, it makes a lot of sense to us right now, because right now you can see the price has been dissected into the three range zone, which we've highlighted of the monthly chart. We have the upper zone, the mid range zone, the lower zone. So ideally, like we said, this month has been so bullish. So ideally, what do we think the price is going? The price is going up because it's bounced off the mid range zone, and we should expect price to be going up. Remember, analyzing the technical chart is a game of discretion and a game of probability. So you can say the price is going right here. We use the term if, right? So we see that price could be making a push to the upper zone. You can see the last four candles of the weekly time frame has been bullish, and it has been giving us a lot of bullish bias in the upward direction. So now let's make sense with this. Now, after the price make a push off here, we expect price to be pushing down here. Now I can spot something that looks like a pattern of the weekly time frame, which is something like that looks like a pattern, like a triple bottom pattern. I don't know if you guys can see right here. It looks like a triple bottom pattern. right? And we seem to be having a push back to where it started from. Let me switch it back to line chart, as you can see. So this is another pattern, right? The price is giving me that make me understand that this structure may be going up to the opposite on zone. So now let's make sense with it. Let's identify the mid-range zone of the weekly time frame. Now let's switch to our line chart again. On the line chart, we can see right here that we have a mid-range zone, right, of the weekly time frame. Now this is beginning to make a lot of sense to us, right? Why? Because we have now been able to zone the price into another smaller zone, which is giving us more clarification on where prices are pushing. And so far, so good. Prices giving us an indication that it may be going to the upward direction. Now, provided that we saw this trade at this point, we really wanted to enter at this point. This could have been our TP1, right, on the bigger time frame, and this we could be looking forward for price to make a push to this side as TP2, right? So, but right now it's on a weekly time frame. We need to break things smaller, and we really need to understand things, right? Now let's make sense of this. I can see price moving a sort of like a wedgie pattern or a lower channel pattern on the weekly time frame. So I'm just have to bring my trend line out to make sense with it and see what price has to tell me. Remember, every tools or every object you draw on the chart is telling you an information, so you need to listen. That's why you need to analyze the first market with some discretion. You can't just analyze it based on off your own thoughts or what you think the market is really gonna do. So let's make sense with this right now. Right. So what can we see here? Now, let me explain what is happening right here. Price has been moving at something like that looks like a downward channel. We can see the mid-range zone of the weekly time frame. Remember, the pattern we're looking for to trade is actually this pattern. For price to go and make the tall touch of the falling weekly channel slash the wedge pattern, whatever it is you want to call it. So this is what the market is doing right now, right? And on the weekly time frame, this is all we can make out of it. So what is price telling us? Price is telling us something for sure, that looking at the structure, looking at the zone in which price is moving, price is bouncing off the monthly mid-range zone and it's moving into the weekly mid-range zone. So there seems to be an opportunity for a 140 pips catch on this trade for the TP1. That if we breaks it up, then we could, take out profit and re-enter back, to this point, provided it breaks this pattern like to the upside. So let's make sense with it more. So making sense with it more, let's bring our Fibonacci tool, because I see price losing steam just at this point. So what do we do with the Fibonacci? We'll bring the Fibonacci right here. We can see the price seems to be rejecting at the 61.8 zone. Now, what does this tell us? It gives us a mixed bias on the scale. Remember, we're trading in probabilities, ifs, or what could be, what should be, and whatever it is you want to call it. So now this is price rejected at the 61.8 Fibonacci region, and okay, let's make more sense with it by moving to the daytime frame. But our bias remains the same as price bounced off, right, the mid-range zone and seem like it's going to be moving to the upper side. So now let's make sense with it further. Let's switch into the daily time frame. Now on the daily time frame, what can we see? We see the pattern right here. Remember the pattern I told you guys about, on the bigger time frame that seems to be like the triple bottom pattern or whatever it is. This is the pattern right here. Let me highlight the pattern right. Good. Now, what we seem to be having is like the third push first to the weekly mid-range zone, then above the weekly mid-range zone to the third touch right here. Then we expect like price to give us like a retracement down to retest the weekly zone that is just broken, powered by the push of the third touch of the falling wedge, then for price to reach this point. So this is what we're looking forward to. But how do we enter? In Forex, you could get like the overall direction, but you could as well miss the point, like miss the entry point, and it's really gonna mess with your risk reward ratio. So now let's make sense with it and let's see what price is telling us right here. Now let's correct the downward trend line, and let's make sure everything's. Now let me identify my daily zone. So switching back to my line charts, let me bring out and identify my daily zone. So this is my daily zone right here, as you can see. So I'm just gonna put this like right back on blue. If you like, you could just give it like a title: daily mid-range zone, right? So just not to bore the old chart with different colors and looking like a clownish kind of like a chart. So now I've identified my daily mid-range zone right here. So how we're trying to make sense with right here. So what we're trying to make sense with right here is simple. Price. Now let's really understand what's going on. Price is bouncing off the monthly mid-range zone, right, and moving towards the weekly mid-range zone, right, and move past the daily mid-range zone, right. So price is moving towards the towards the weekly mid-range zone. It's broken the daily mid-range zone, which are the area of sensitivity. You can see the buy pressure right here, buy pressure right here, buy pressure right here, sell pressure right here. Price has broken it. So ideally, what do you think price is going to do? We are waiting for price to make a retest, right, at the zone. So let me adjust the mid-range zone properly so we could get like an accurate a picture of what is really going on. So now that we see the price has made a push above the daily mid-range zone, trying to approach the weekly mid-range zone, right? Now we can have our buyers back in the buy direction. Now let's look at the Fibonacci one more time again. Now we can see that on the daily time frame, price has broken the 61.8 Fibonacci, meaning there is a strong pressure in the bullish direction, meaning buyers are injecting more order into it. And what we saw on the weekly time frame was just a reaction of price regarding the Fibonacci 61.8 time zone. This is cool. It's giving us more information, as we can see. So by the end of today, I expect price to close as a bullish candlestick above the 61.8 zone. So it's making a lot of sense to us right now. So let's take off the Fibonacci. Now our buyers right now is strongly in the bullish direction. So let's see something right here. So let's connect the trend line. So right here, you can see we can connect the trend line down to give us something that looks like a real-time wedge pattern. So what does this mean? This tells us that if we're really going to get into this trade, we need to pay attention to this point right here before it hit our final TP. Then, of course, the break, the retest, and the continuation to the weekly, the monthly upper zone. So now let's make sense with things right here. So we're seeing an opportunity to enter the market right away. So we have to, but we really have to understand the structure in this time frame to understand where we're gonna get in. So now let's look at the structure. Price has been making a series of a lower highs, a lower highs, a low. The last lower high right here got broken, which made price push off the monthly mid-range zone above the daily mid-range zone, which is currently approaching the weekly mid-range zone. So let's look at the 4 hours time frame. On the 4 hours time frame, what can we see right here? We could see the prices successfully pushed above okay, you can see the prices successfully pushed above the daily mid-range zone. Remember, don't confuse it. This is the daily mid-range zone. You can choose another color you like if you really wanted to do it. And price, ever since prices pushed off on the monthly mid-range zone, price has been making a series of higher lows. Now, let's look at the Fibonacci one more time again, because this is a very sensitive region, so we really need to really put every confirmation and check, because the market is moving so crazy these days, and you can just help them to pull, every confirmations in check. Now, as you can see, price has been violating like the 61.8 zone for a couple days. Like we have like 1, 2, 3, 4, 5, 6, 7, 8 like candles, and that's like for the past 2 days prices has been violating it. So we're waiting for the daily closure of price above the 61.8, which is going to give us back to the daily time frame. We're waiting for price to make a close above the 61.8 and make a push to the upside. So this time around, we are having the first push right to this side and right back to this side. So for now, let's go to the 4 hours time frame to make sense with our entry. Now on the 4 hours time frame, where we saw the prices broken the the daily mid-range zone to the upside, and it's giving us some like a retest right now. So for proper entry, let's move back to the 1 hour, which is our time frame for entry. Now, if you understand what we've been teaching you guys for quite a long time, we say when you see price make a break, you don't just enter, because price is really going to come back to make a retest. So this is the retest the price is making right now on the 1 hour time frame. You can see the correction back. So we expect price to make a push first to this point, then make the second push right to this point. So this is the right here. So let's make sense with what we need for our entry. Now, what do we need for our entry? We're going to make a small small resistance right here, which is the last point where price has made its resistance right here. Now we're waiting for price to make a break above this resistance right here and give us the first push to this point. When price gets to this point, I expect you guys to have a break even or take half profit and wait for price to make the push to this point, which is our area of take profit, which is 138 pips. So what is the setup going to look like on 1 hour? Wait for a break of this point, wait for a retest right at this point, and wait for price to make a push right to this point, then right to this point. So this is a standard analysis of the USDCAD or what we're expecting of the USDCAD. So where should your stop loss be? Your stop loss should be below the resistance that's broken. Now, remember we said you just don't define your risk by yourself. You don't predefine your risk, but you define your risk based off what the market is telling. Now, what is the market telling us? For aggressive traders, some might have gotten in the trade at this point just to secure the 133 pips. In this kind of scenario, you put, since you gain 133 pips, now that means you could as well, since you're aiming for 133 pips, you can as well push your stop loss down to 1/4 of it, or 30 pips, which is below the previous resistance broken. Now, if you do it like this, your risk reward ratio is going to be 1:4. Then you have to calculate the dollar value or the pounds or euro value in your account to fit into this risk reward. So then you have your TP1 at this point. When some people enter at this point, 74 TP1, 130 plus TP2. But if you enter here and wait for break, you're gonna have for 48 pips TP1. You're gonna have for 103 pips on TP2. Then your stop loss is definitely gonna be at this point. So you're gonna have like 1:2 for TP1, then 1:5 for TP2. So this is a standard analysis on the USD CAD. Thank you very much.